What is up, you guys? Pete DiCarlo here, and today we're going to talk about how to buy a Tesla with money you made on Tesla stock. So essentially, in this video, I'm going to explain to you how you could make, $86,000 to go and buy a Tesla off of trading Tesla stock. And it's not, trading straight up options, doing some crazy thing or, anything like that. It is a tried and true method that myself and Warren Buffett and plenty other legitimate investors and traders are using each and every day to pull consistent profits from the market. And we're going to talk about that in this video. So hit the like button, subscribe to this channel, hit the notification bell so you can stay up to date with all the videos that we put out. And we are going to go right into it right now. I don't want to waste any of your time. So the first thing I want to do is take a look at what Tesla I want to buy. So we're just going to pick a Model S and we're just going to use the long range. Now, in this example, we are going to assume that you could theoretically go and buy a Tesla outright. So you could have $84,490 in straight up cash to go and buy this car. Now, if you're about to walk away because you're like, Pete, I don't have $84,000, some of you might not have that. But this method will still be great for compiling and compounding all of the cash that you have into more and more money to eventually buy a Tesla. So if you have $5,000, you might not be able to buy this car in 2 years. It might take you 5 years, but everything we talk about is applicable to however much money you have, whether it's 5, 10, 20, or $100,000. But in this example, we're going to use $84,490. And I've already put this here in our compound interest calculator, which we're going to use later on. Now, before I teach you the strategy, a lot of people are probably going to say, well, Pete, you could have just held the stock and over the past, 2, 3, 4 years, you would have made more than enough money with how much this thing has appreciated in value. You're completely right. But Tesla is no longer extremely undervalued like it was prior. And it really has just been sitting sideways for the past 7 to 8 months. And with this strategy, you could have made more than enough money, with that 84 grand, probably about $40,000, even with Tesla just sitting sideways. Now, if you're somebody who's like, I don't understand these charts, I'm telling you, you don't need to. Warren Buffett used a strategy. Warren wasn't caring about charts. What essentially we're talking about in this video is going to be selling cash secured puts. Now, when you are selling a cash secured put, you are selling a bearish position to somebody who is going to lose money 90% of the time. 90% of the time, traders lose money. But the people who sell the position to that person make money 90% of the time. There is no catch. We're going to explain all this. The only catch is that it takes a long time and you're not going to make 100% overnight. Now, when you are selling a put, you're going to see an options chain. I'm just using Robinhood right now, even though I'm not a massive fan of it. The user interface is pretty good, and most of you guys probably have this broker. Now, anytime you're looking at an options chain or an options market, you're going to see expiration dates. The ones that we're going to be looking at are called weeklies, and this means that it's going to expire 7 days from now. So right now is August 26th, so we don't care about the ones that are going to expire next week. We are looking at September 3rd. Now, when it comes to selling a put, you are saying that if the stock closes below the strike price that you set, you will buy 100 shares of that stock, in this case Tesla, for whatever the strike price is. So this is how Warren really had a ton of compounding interest over his life, because what he would do is he would just sell covered puts on any stock he planned to own for the long term. So for instance, let's say we're looking at Tesla and Tesla is trading at $700, but we don't want to pay $700. We want to pay $675. And what you want to do with selling these puts is you really want to sell a put when you think the stock will not close below that price. Because let's say I did sell a $675 for Tesla. If I sold a $675 on Tesla, if Tesla closes below $675, remember, I have to buy those shares. But if it doesn't close below $675, I get to keep this premium, which is a juicy, juicy premium. So for this example, let's say I think there is no way Tesla will close below, let's just say $660 by next Friday. And you can see up here, if we go to sell, we go to put, and we go to this expiration for September 3rd, that if we were to sell a 660, there's an 82% chance of profit. I like those odds a lot. This means that the person who is buying this option from us has an 18% chance of profit, right? Now you might be like, well, why the hell would somebody buy this from me? Well, it's because people like to YOLO, but it's also because there's unlimited potential for that option. You will see once we start breaking down this, how you could actually end up, you're definitely going to end up, capping out how much money you can end up making. Whereas if somebody was buying this, they wouldn't end up capping what they're going to make. So what we're going to do right now is, let's just use, for example, this 670. 670 is pretty good. So this has a 79% chance of making money. And what we're going to do is hit sell, and then we're going to hit the plus button. So what you're going to see here is we have 3,000 volume. That's good volume. We want to know that a lot of people are trading this. And what you will notice over here, but my face is in the way. Let me make it a little smaller. What you'll notice over here is your max loss. Now, don't freak out when you see this number, because this means that if Tesla went to 0 tomorrow, which it's not going to, this is how much money you would lose, because that's how much money you have to put up. You have to put up the price of Tesla, the strike that you're going to end up doing, which is 670 times 100. And so in this instance right here, you're going to put up $66,370. And as long as Tesla closes above 670 by next Friday, which we have an 80% chance of that happening, you will make $630. So 1% each and every week, you have an 80% chance to make 1% each and every week. Now, like I said before, if Tesla closes below 670, which is trading at 700 right now, if it closes below 670, you will make 1% return on your investment. If it goes up to like 750, you still make 1% return on your investment, because the max you can make is 630. And if Tesla dumps, but it closes by next Friday above 670, you still make $630. And the worst case scenario is Tesla closes below 670 and you're forced to buy 100 shares of Tesla at $670. Now, let's just say that a couple of weeks ago, you did this with Tesla, and let's say when it was trading at 720, you ended up selling this put for 700 and you got stuck with the shares. Oh no, worst case scenario is Tesla drops 10%, you don't freak out, and because this company does nothing but trend up, eventually it bounces a couple days later and you actually made all your money back. If not, maybe, if your average was 690, you're actually up 2-3% on your money, which is even better than the 1% that we're shooting for. Now, I've been selling puts mainly for the past 3 or 4 years. I do still trade stocks actively because I do have an academy and I teach people, but this is what I would be doing if I wasn't actually teaching people. And so you can think to yourself, if you're looking to make 1% return a week, which I've been able to do, not even looking at charts, but just for the past 4 or 5 years, it's very easy to make 1% return a week. 1% return per week would be what? 52% return per year. So where we have our compound interest calculator, it says interest rate, 52% return per year. Now, annual addition, if you want to put more money into your account, you can do that, but in this instance, we are not going to. And years to grow, let's just give it 2 years. If we go ahead and run that total, that means that within 2 years, you will have $195,000. Now, if we take the $195,000 and we minus the $84,000 that we started with, you will end up with $111,000. And with $111,000, you can easily go ahead and buy the Tesla Model S that you would have initially taken that money with and just, put it towards the car. Now, let's say that you don't think you can get 52% return per week. 52% return per year. And instead of, selling a put for 670 or, selling something that has an 80% chance of money each and every week, you want to be very, very diligent. You don't want to lose any of this money. What you could do is actually sell a 640 put or sell something that has a 90% chance of making money. So what you'll notice is the further away, the safer that you get. So remember, this one's a 90% chance of making money, the less money you'll make. So we had an 80% chance of making money and we were going to make $640 or 1% return on our money. And in this instance here, what we're going to do is sell a 630. We have a 90% chance of making money, but we're only going to make $300, which is 0.5%. Well, 0.5% per year would be, per week would be what? A 21% return per year. And even with that, you'd still have $123,000. So if you minus 123 from 80, you'd still make $42,000. You could go out and buy a Tesla Model 3 for that price. You would still get the free Tesla. Now, I know students of mine, and including myself, where I can push, and this is because I'm sitting here in front of the charts a couple days a week. I've been doing this a while. I can usually push sometimes 2, 3, 4% returns per week. So if I can push 2% returns per week, that's 104% per year, and I would have 350 grand in 2 years. Now, I don't want this to discourage you if you don't have the money to be selling cash secured puts on Tesla, because Tesla does require you to have, remember, 100 shares, so that would be $60,000 to $70,000 per contract. So like I said before, if you have $5,000, let's say $10,000, you could easily do this on different companies that you like. Let's just say you love Snapchat long term. And if you take a look at Snapchat, and here's the thing, you only want to do this with companies that you really like long term. You don't want to do this with garbage companies that you wouldn't want to own. Because remember, the beautiful part about this is the worst case scenario, we get to buy a company that we love. So if you look at Snapchat, it's done nothing but go up over the past 2-3 years. And if we really pull out, it's done nothing but go up over the past 4 years. So with something like Snapchat's only trading at $71 per share. So let's say that you can only start with $7,500. And what you're going to do is we're going to look at the Snapchat options chain. And what you're going to do in each and every week, you don't even have to look at the chart. You can just come over here and you can sell a put, and you're just going to look at your chance of profitability. We're going to pick something that has like an 80% chance of making money. So if we pick this one, a 67.50, and you were to sell this, you would have to put up $6,684 to make $66 in return, which is a 1% return. So the numbers, don't change. The overall end and the starting point change, but the percentage of gain stays the same. So same thing, 2% or 2 years, 52% return a year, because 1% return per week with an 80% chance of doing that. Really, your chances are a little higher if you're actually watching charts and timing. That means within 2 years, you'd have $17,000. Within 5 years, you would have $60,000. Within 30 years, and not putting any money in, but just doing this, you would have $2.139 billion. Some of you guys may be like, why doesn't everybody do this? They should. They really should. But the issue is people want fast money. They want money now. They don't want to sit here and sell puts each and every week. And so I really, truly believe each and every single one of you should do this, especially if you're a long-term investor. The way that I like to think about this is, it's kind of like setting a limit order for a company that you like. And at the end of the day, if you get stuck with the shares, that's great because it's a company you really enjoy. If you end up not getting stuck with the shares, well, then you get money in the meantime, right? Let's just even say with something like you really like Boeing and you plan to buy 100 shares of Boeing, and Boeing's trading at $215. Let's say that you don't think Boeing's worth $215. You think Boeing's worth $200. Well, what you could do is just sell cash secured puts on Boeing for $200 each and every week until it fills. If it doesn't fill, well, then guess what? You just keep the premiums each and every week. If it does fill, then you get the price of the stock that you really wanted. Guys, I hope that this video helped. Hit the like button, subscribe to this channel, hit the notification bell, check out all of my links down below. Anything I'm affiliated with will be down there. And I'm going to be posting a lot more videos on investing in general, not just the stock market, not just trading, but, videos based around investing across the board, because there is so much more to building wealth than just the stock market, even though that's what I truly love. If you want to learn more about trading, how to read charts, I do have a second channel. It's really like my main channel at this point, so we have more subscribers, called Traders Helping Traders, and the link to that will be down below. Guys, thank you for all the support. Hit the like button, subscribe to this channel. It means the world to me, and I'll see you guys tomorrow. Peace.